us here on Editors Roundtable. Tough week, worst we've had all of 2024 so far, with a 4% cut Friday to Friday, and that too with the holiday thrown in. So one can only hope the next one perhaps is a little better. But we are, of course, discussing what was top of mind, and what will be top of mind will be earnings season, and IT will be off the block first. TCS reports on Thursday. Reema, are we expecting any recovery, or is it going to be a little subdued?
Well, no recovery. So Q2 growth rate should be similar to what we had in Q1, or maybe slightly better, because US banking and financial sector continues to recover. Margins will be largely stable. Management commentary to remain unchanged from Q1, which means they will still indicate the discretionary spending has not come back. It continues to remain cost optimization and large cost takeouts. But you have to keep the context of where IT is in mind. Now, in the June quarter, the Nifty IT index rallied 16%. From 1st of June to now, the Nifty IT index is up 30%, and at the same time, the Nifty is up close to about 15-16%. So massive outperformance, and valuations too are rich compared to what they've been in the last 5 years. But that said, even the market itself is trading at valuations higher. Most of the sectors are. So, now I think what analysts are saying is that, the narrative is that growth is going to recover. We've seen a valuation re-rating. Investor positioning, which was deeply underweight, perhaps has now become neutral, but now numbers need to follow, or at least the commentary, the guidance needs to show that there is a recovery underway. So now the key to track will be Infosys guidance for the full year. Now it currently stands at 3 to 4%. The question is, will they go ahead and up the guidance? Many on the street believe there is a case, given the kind of deal wins, the ramp up. So Kotak is talking about a guidance increase of 100 basis points, 4 to 5%. Citi is talking about an increase in guidance. CLSA maintains that Infi will hold on to its guidance, but they say if they don't, it would be a negative trigger for the market. Secondly, the street expects that in FY26 there will be margin expansion, but so far that margin expansion hasn't played out. So commentary regarding whether this thesis of margin expansion holds for next year is going to be watched, and whether revenue is going to accelerate. I'm going to quickly leave you with some brokerage opinions. So CLSA says they remain cautious on the Indian IT sector. The lack of large deal ramp up and rich valuations keeps them cautious. Nomura is constructive in the sector because they're talking about revenue accelerating, revenue earnings bottoming out. Kotak says there will be an improvement, but well short of the normal. And HSBC is saying that we are heading towards a prolonged period of consolidation and range-bound returns for the sector. This is similar to 2014 and 2018, when the IT index offered mid-single-digit kind of returns. So we are in a painfully slow recovery in progress. So, Aman, where do you stand on IT? I think in the last conversation you said that you're neutral